The price looked simple until the final payment screen. A meal, a ticket, a room, or a service begins with one visible number. You choose between options using that number. Then the checkout continues. A delivery fee appears. A service fee appears. Tax is added. A conditional charge may appear. By the time the payment button is ready, the amount you are being asked to pay is no longer the amount that guided the original choice. The important question is not whether every listed charge is real. Many of them are. The question is why the full payable amount appears in layers instead of appearing as one complete number at the beginning. This is the mandatory fee stack at checkout. The first stage is the headline price. It is the cleanest number in the transaction. It may be the price of one menu item, one night, one seat, or one service. It is easy to display. It is easy to scan. Most importantly, it is easy to compare. At this point, however, the transaction is not fully built. The system may not yet know the delivery address, the order size, the merchant, the applicable local charge, the distance, the tax treatment, or whether a threshold has been met. Some costs belong to the item itself. Others belong to the transaction that surrounds it. So the first number can be accurate without being complete. That distinction matters because the consumer usually begins comparing before the rest of the price architecture is visible. Imagine two options on the same screen. One appears slightly cheaper. The difference is clear enough to influence the choice. But the comparison is being made between item prices, not necessarily between complete transactions. The mandatory checkout fee stack develops later. First comes the item price, then the cart subtotal, then an applicable service fee, then an applicable delivery fee. Depending on the order, there may also be a conditional fee, such as a small order charge or a charge connected to distance. Government-required charges or estimated taxes may appear as separate lines. An optional tip belongs in a different category because it is not part of the same mandatory structure. Only after these layers have been assembled does the final total become visible. Seen as a diagram, the logic is simple. At the top is the price that attracted attention. Below it is the subtotal created by the selected items. Below that are charges connected to processing or service. Then charges connected to delivery. Then any conditional charge that applies only because of the order's size, location, or other characteristics. Then tax or another government-related charge. The optional tip sits outside the mandatory layers. At the bottom is the final amount required to complete the transaction. This is not one price changing into another. It is a transaction being assembled from different price components at different stages. Research describes this broader structure as partitioned pricing. Instead of presenting one all-inclusive price, the total is divided into a base component and one or more additional components. The mechanism is not simply that extra charges exist. The mechanism is that the charges become visible at different moments. That timing changes what information is available when the consumer makes each decision. Early in the process, the shopper can compare visible item prices. Later, the shopper can compare final totals. Those are not always the same comparison. A lower item price does not necessarily produce the lower final transaction. But until all relevant components have been assembled, the consumer cannot see the complete payable architecture. This creates the central blind spot. The first number is easy to compare. The full transaction is not yet available to compare. The approved DoorDash example shows how this can work in a current United States food delivery context. A public restaurant storefront can display individual menu item prices before an order is assembled. DoorDash's United States consumer documentation also describes several possible charge categories, including service fees, delivery fees, small order fees, distance-related fees, certain regulatory or government-related charges, taxes, and optional tips. Not every order contains every category. The exact stack can vary by merchant, location, order size, membership status, demand conditions, and applicable local requirements. That variation is important. The example is not one universal DoorDash checkout. It is a bounded illustration of how an item price can appear at the beginning, while the full transaction depends on information introduced later. The system begins with the part that can be displayed before the order is fully defined. Then, the order acquires characteristics. The address determines where the delivery must go. The cart determines the subtotal. The distance may affect delivery conditions. The size of the order may determine whether a threshold has been met. Local rules may affect taxes or other charges. The final price cannot be assembled in exactly the same way before those variables exist. That creates a legitimate operational reason for some components to be calculated later. A delivery platform is not only selling the item shown on the menu, it is also coordinating a transaction that includes merchant participation, ordering infrastructure, delivery operations, payment processing, and location-specific requirements. Separating those components can make the structure more flexible. A delivery charge can vary without changing every menu price. A tax can be applied according to the relevant location. A conditional fee can appear only when its condition is met. This is the cost allocation logic behind the stack. But operational flexibility creates a comparison trade-off. The business can keep the entry price simple while allocating other costs separately. The consumer receives a more detailed breakdown later, yet the consumer may have already chosen the item, the merchant, or the service before the complete total becomes available. The issue is not that line items are automatically misleading. A separate line can provide useful information. It can show which portion is connected to delivery, which portion is connected to service, and which portion is tax. Combining everything into one number might make the total easier to compare, while making the internal components less visible. So there are two different kinds of transparency. One is component transparency, seeing what the total contains. The other is total price transparency, seeing the complete amount early enough to compare it with alternatives. A checkout can perform well on one and less well on the other. The final screen may explain the charges clearly, but clarity at the final screen does not recreate the information that was missing when the original comparison was made. This is why timing is part of price architecture. Suppose a shopper compares two restaurants based on visible menu prices. One appears cheaper. The shopper selects items, builds the cart, enters the delivery location, and continues through checkout. Only then does the complete stack appear. At that point, the shopper has already invested time and attention. The order has been configured. The options may no longer feel as easy to compare as they did at the beginning. That does not prove the platform intended to prevent comparison. It does not prove concealment. It does not prove illegality. It shows that the system reveals different parts of the price at different stages, and that early decisions can therefore be made using incomplete totals. The distinction between incomplete and false is essential. The first number may be entirely accurate. It may describe the item exactly, but it does not necessarily describe the complete transaction. A menu item price is not the same thing as the amount required to have that item delivered. A base fare is not the same thing as the completed booking. A room rate is not always the same thing as the final stay price. The visible number can be real, while still representing only one layer. Research on partitioned pricing has examined how consumers process these separated components. The general concern is not that people are incapable of addition. It is that comparison becomes more demanding when the relevant numbers are separated across screens, labels, conditions, or stages. The consumer must identify which charges are mandatory, then determine which are conditional, then separate optional items from required ones, then reconstruct the total, then repeat that process for another option. A simple comparison between two visible prices becomes a comparison between two price architectures. The Federal Trade Commission's earlier economic analysis of hotel resort fees examined a related mechanism in a different sector. It found that separating mandatory fees from the initially displayed room price could increase the search and cognitive work required to identify and compare total prices. That finding belongs to the hotel context examined. It should not be treated as a direct finding about food delivery platforms, but the underlying comparison problem is useful. When the full amount is divided across stages, the consumer must do more work to compare complete transactions rather than isolated components. The legal boundary also varies. In the United States, a federal fee rule that became effective in May 2025 covers live event tickets and short-term lodging. It sets upfront total price requirements for those covered sectors, with defined treatment for certain excluded categories. That rule is not a general rule for every checkout and does not establish that food delivery pricing follows the same legal standard. Different markets regulate different sectors, charge types, and disclosure stages in different ways. So a later charge does not by itself prove that anything was hidden unlawfully. The correct conclusion is narrower. Price presentation shapes the moment at which a complete comparison becomes possible. The mandatory fee stack also reveals why the final amount can feel surprising even when each line is labeled. The surprise often comes from the gap between the number used to choose and the number required to pay. The consumer did not necessarily misunderstand the item price. The consumer encountered a broader transaction later. That is why the consequence is not simply that the customer pays more. The distinct consequence is that early comparisons may be made using incomplete totals. The structure changes the comparison set. At the beginning, the consumer sees items. At the end, the consumer sees transactions. An item is one component. A transaction includes the item plus the conditions required to complete the purchase. Once that distinction is visible, the checkout no longer looks like a single price that suddenly increased. It looks like a stack being completed. The system may gain flexibility from that stack. Costs can be allocated separately. Conditional charges can apply only when relevant. Taxes can reflect location. The final screen can provide a detailed breakdown. But the trade-off is that the cleanest number appears before the most complete number. That places part of the comparison burden on the consumer. The shopper can easily compare the visible entry prices. To compare full payable amounts, the shopper may need to move deeper into each transaction and wait until the entire stack has been assembled. The first price, then, is not necessarily a promise of the final total. It is the visible starting layer of a larger price architecture. That is the reusable mental model. Separate the headline price from the full payable architecture.